Good evening students. Today is the last topic we are going to discuss about small business finance under financing. So we can see the types of sources used to finance a small business. One is equity and debt. Equity, money or capital contributed by owners, capital sources that trade cash from some portion of ownership or equity of a business. Equity is sometimes called risk capital because the investor puts into the money at risk. Since the investor requires ownership in the business, no prepayment of money with interest is required. Debt, source of funding that require the money borrowed to be paid back with interest. Next, we are going to see equity source under personal saving, friends and relatives, partners, private investors, venture capitalists, state-sponsored venture capital funds. Next, we see personal saving under equity shows. Advantages and disadvantages. Owner keep all the profit. Owner risk of loss provide motivation to succeed. Disadvantages creates a chance of loss, causes personal sacrifice, cost loan of return, loss of return from use of saving, carries limited liability. Partnership with people under advantages and disadvantages. Advantages brings in more cash, share financial risk, increase borrowing power. Disadvantages requires giving up a portion of profit, result in the loss of some control and ownership. Next we see family and friends. Advantages and disadvantages. Provide quick and easy source of fund, allow less formal arrangements, imposes fewer restrictions. Disadvantages create chance of loss, causes possible loss of return from use of saving, carries unlimited liability. Next, under that, equity shows us private investors. Wealthy individuals functioning as non-professional investors who are willing to invest a local business for financing or emotional reason and who sometimes refer to maintain anonymous. Advantages: invest in region in which they live, will finance startup business. Disadvantages: not easy to locate, must be chosen carefully and may not always be reliable source. Next, venture capitalist. Individual or firms that invest money professionally to make money expect a large capital gain and look for the high growth potential, minimum 30 to 50% return on investment. Provide large amount of money, allow owner to maintain control and cooperation of business, provide for additional assistance when available. Disadvantages: most business do not qualify. Entrepreneur must give a part ownership. Small businesses may have trouble attracting venture capitalist. Next, state sponsored venture capital fund. Funds provided to entrepreneurship by the state to effect encourage economic development, creation of job. Advantages: create job, do not focus solely in profit. Disadvantage: none noted. Next we see debt sources under money or capital borrowed must be paid back to the interest. Banks, trade credit, finance companies, credit unions, government agencies. Next, analysis of debt sources, advantages and disadvantages. Relatively easy and quick to obtain, maintain control and ownership of the business, repay at the more advantageous time, tax relaxation. Disadvantages: higher rate interest, risk is insufficient profit, easy to abuse and overuse, restrictions and limitations imposed by the lender. Source of debt source financing: banks, most common source of business financing. A line of credit allow business to borrow a stated amount of money. Require that money to paid up on a regular basis according to repayment plan specified. Very conservative and not include to lend be business that can be used well established. Usually requires some kind of collateral. Trade credit, short-term financing, credit from the industries are made. Finance companies take more risk or more expensive, will ask for some for the security like entrepreneur, home, account receivable or business investors. Trade union, cooperative formed by labor union or employees for the benefits of the members. Personal loans are from the family. It also comes under the flexible interest rate and maybe low, mixing financial affairs by the family relationship. Government use of commercial bank to process and release the money and guarantees up to 90% from the loan. Also lend public funds to the ventures and handicapped person who qualify. Then government agencies and minority enterprises for small business and investor companies established by SBA provide funding to business whose ownership at least 51% minority. Okay, government agencies under the licensed by provide equity and debt investors with twice a startup venture, private owned requirement, etc. Thank you.